Good afternoon, Wealth Our Way Nation. What is going on? It is your man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform Wealth Our Way, where our motto is wealth is not only for the wealthy. I welcome you to episode 63. We are talking about the difference between a life insurance agent and a life insurance broker. We're also going to look at how to determine how much life insurance is the right amount for you. Before we get started, of course, I want to acknowledge and thank each and every one of you who are here with me live as I broadcast across the Wealth Our Way Facebook and YouTube pages. I also want to give the always correct and proper salute to the Wealth Our Way Nation members who watch this program pre-recorded overnight, over the weekend, on their lunch break, anywhere they can squeeze 15 minutes of financial literacy in, and then a heartfelt how are you to the Life 101 platform members who listen to the audio recording of this very here program. So, it's Life Insurance Awareness Month. We've been getting into life insurance all week. Yesterday, we talked about how to tell whether a life insurance company is a good or bad company. Today, we're going to talk about whether you want to work with a life insurance agent or a broker, what the difference between those two are. And then I'm going to take you over to a nonprofit website called lifehappens.org. Great website, very informative. If you do want to know more about life insurance, I challenge you to spend some time on the lifehappens.org website. All they care about is making sure that more and more people understand the importance of and have access to life insurance. So with that being said, let's talk a little bit about the difference between a life insurance agent and a life insurance broker. The very first easiest to explain definition between these two titles are: an agent works directly for a particular life insurance company. Now, I'll give you my own personal history and experience. In 2013, I joined New York Life Insurance Company. I went there to be an investment professional, to pass the Series 7 exam again, because it was my second time taking it, so that I could sell stocks, bonds, mutual funds, investment products to clients who needed them. But I also wanted to learn more about the insurance industry in general and how insurance could help my clients, either from a standpoint of planning for their untimely demise, planning for a death that we all know is coming, or using life insurance even as an asset class to provide some tax-free income down the road. So I wanted to learn those things, and I felt as though there was no better place to learn than at a solid company like a New York Life that had a history of being around for over 170 years at the time, or 150 years at the time now. I think they just celebrated their 175th anniversary. With that being said, I worked at New York Life Insurance. My paychecks came from New York Life Insurance based on products that I sold. I was also able to sell insurance at other companies. When I sold for those other companies, I didn't work there. I brokered their products. So that brings us to this definition and this distinguishing understanding of what an agent is versus a broker. Is one better than another? I go back to a statement you guys have heard me say a million times on Wealth Our Way. I always tell you there's no such thing as a bad financial services product. There are just bad marriages. I'm going to go and say the same thing about the difference between an insurance agent and an insurance broker. Neither is good, neither is bad. It just depends on your situation, A, and your understanding of who they are, B. Those are the two things that are important. Understand that when you go to a New York Life Insurance agent, you've heard my saying that when your only tool is a hammer, you think the entire world looks like a nail. It's the same thing when you're a New York Life Insurance agent. Every problem that you have can be solved with New York Life Insurance policies. That is normally the mindset. There's nothing wrong with that mindset. If you believe in something, you work there, you hear about it all the time, you know everything about it, you're going to think of how this product can solve a problem. The truth of the matter is that there's very seldom the opportunity for one particular company to have all of the solutions that someone may need. Some companies are stronger in some areas than other areas. As a result of that, when you work with an agent, you should keep in mind that first and foremost, that agent's go-to is going to be his or her company's policies and products. If you work with a broker, they're going to examine from a bunch of companies and look for what may be best for you. Now, I've used the word may because we always have to worry about how people are compensated. I may be a broker and have access to 10 different companies that I normally offer my clients. Every one of those 10 companies have a different structure on what they have agreed to pay me as a broker. If I have a company that tells me, hey, Tank, when you bring a client on board, we're going to pay you 110% of whatever their first year insurance premiums are. I'm like, that's pretty impressive. And then company B says, Tank, when you bring a client on, we're going to pay you 80% of whatever the first year's premiums are. I'll be honest with you. I'm a straight up guy. It's going to take a lot for me to go with the 80% company as opposed to the 110% company. The 110% company is going to really have to be kind of questionable for my client for me to overlook a 30% difference in my compensation. That is why you need to do your homework when you're dealing with a broker and know that they are putting you with a company that has your best interest in mind and not necessarily their best interest in mind. Also, with an agent, you have to be cognizant of knowing, is their particular company best for you? You know, when I use this example a lot. My oldest daughter, my big baby, Bria, when she was born, I was driving a 1985 Nissan 300ZX. It was beautiful. Red sports car, T-tops, gorgeous. When that baby was born, there's nowhere for a car seat in a 300ZX. I had to get rid of the Nissan 300ZX and buy a Jeep Cherokee. Sad time in my life as far as cars, happy time as far as having the big baby. So why do I bring that story up? There was nothing wrong with my Nissan 300ZX. It just didn't fit my need anymore. I needed something that would allow me to transport my newborn baby around. Same thing can be true for these insurance products. You may have a need for a term policy and never want to convert it to a permanent policy. That need may be able to be satisfied by a lower rated insurance company. That premium will be a lot lower than a higher rated company. So you want to keep in mind what your need is, understand what the person who is talking to you about these policies, do your own homework on the internet. We live in the information age, and come to programs like this, send emails to people like me, and get some understanding as to what the overall focus of your insurance product purchasing, and if you're doing any insurance planning, and there is such a thing as insurance planning, what that is. When you come to the webinar in October, you will see I use a technique called stacking life insurance to reduce my clients' insurance costs, but get them the maximum amount of coverage that they need. So insurance brokers, insurance agents, what your key takeaway needs to be: an agent works for a specific company. A broker has access to a bunch of companies. A broker will have to shop your information. So you also want to be cognizant that there may be more paperwork, there may be more time that goes into a brokered product as opposed to it all being done under one roof at an insurance agent's. So now we're going to go to the share screen and we're going to go to the lifehappens.org website. Let's take a look. Wow, pretty little girl. Lifehappens.org. This is Life Insurance Awareness Month. Let's take a quick look at, the beautiful Kelly Rowland, formerly of Destiny's Child. She is a humanitarian and spokesperson for Life Insurance Awareness Month. This website will teach you a lot about life insurance, disability insurance, long-term care insurance. But what I want to show you today is their life insurance needs calculator and walk you through how you determine how much insurance you need. So very easy. Click Get Started. It's going to ask you a series of questions. I'm going to use a random set of numbers. How much annual income would you like to provide if you were no longer here? It gives you some explanation about how you should come up with this number. Think about how much money your family will need to cover daily living expenses. This is typically 60 to 80% of your individual post-tax income, but they don't want you to include college savings, childcare, any debts that you want to pay off. They'll deal with that later. So let's say I make $100,000, and they want you to use post-tax income. So let's say I have a effective tax rate of 20%. So now I'm at $80,000. If I want to cut the difference between 60 and 80%, I'll use 70%. 70% of $80,000 is $56,000. So I want to provide $56,000 a year for my loved ones if I die. This is not taking inflation into cost. Let's say I have a 5-year-old child. I tell my clients that they want to cover their children through what you would expect to be 4 years of college. So 4 years of college, graduating high school, 18 or 19, 4 years later is 23. 23 minus 5, the kid's 5 now in this example, means you want to give them money for 18 years. You want to replace your income for 18 years. Now, what do you have as a debt? You've passed away. What debts would you have outstanding that you don't want to eat into the income replacement money? You want these numbers paid off right away. Let's say I have a home, a little bit of student loan debt, some credit card balances, and all total, the debts total $175,000. That's my mortgage, that's my student loans, that's my credit card, that's my car loans. How would you like to provide for childcare? I'm going to leave this one at 0. We can deal with that later, or when you go through, you can deal with it. It's just, for the sake of time and what we're trying to cover here, we'll deal with childcare separately. But do know that we're lowering our total insurance need because we're not adding in childcare. How many children require college funding? Well, I have 1 child, but I'm not going to put that in there. I'm going to let you do it on your time, but you'll see it that when it breaks it down where it says 0, we can just in our mind add a number. But I don't feel like going through adding the kid's name and all of that stuff. So we're going to leave that blank. How much would you like to set aside for an emergency fund? If you don't already have one, it's a good idea to set along 3 to 6 sides worth of money in your emergency fund. We just said that this person is at $100,000. 20% of $100,000 is their tax rate, which is 20 grand, leaves them $80,000 a year of after-tax income. Half of that, 6 months, would be $40,000. So let's put $40,000 for an emergency fund. Now, how much insurance do you already have? This person has no personal insurance, but they got a job, and their job, they normally will cover 2 to 3 times your income. So let's look at somebody who's making 100 grand a year and say they have 2 times their job coverage, $200,000. So now let's look at what came up. To replace the income, we want $858,000 roughly. To pay the debts off, another $175,000. 40 for an emergency fund, 20 for burial cost. We did not put in childcare and college, which are 2 huge expenses that we may have. We then said we have $200,000 that we need, that we're going to get from our job if we die with that job. So we still need $893,000 of insurance. One of the hardest things I have to explain to people, is exactly how much insurance they need. People oftentimes do not understand what they're worth insurance-wise. So a lot of times someone will say you need $1 million, $2 million, $3 million of insurance. You think they're trying to oversell you. They're not. You're worth more than you think if your income needs to be replaced. So please visit lifehappens.org. Look at the calculator. Please come back tomorrow. We're going to talk more insurance tomorrow. And please always, always remember that wealth is not only for the wealthy. I will see you tomorrow. Take care.